Hi, I'm Johnny Waits. I'm the CEO of SDS Investment Holdings, which is a group of companies focused on providing value-add solutions to gated estates, sectional title bodies, corporate and homeowners associations, collectively referred to as community schemes. Today we're here to talk about one of our group subsidiaries, BC Funding Solutions, and the project that we underwent with Moore Debt Advisory to raise capital in the debt capital markets. So BC Funding Solutions faced a number of challenges historically, which led us to approaching Moore to assist us with a solution in raising capital. Historically, we had focused our efforts in raising private capital to facilitate loan funding to community schemes. And we got to the point where, and we have got to the point where the growth of the business required us to go and source alternative, larger sources of capital, which would ultimately come from the capital markets. So together with Moore Debt Advisory, we came up with a structure that would allow us to access the capital markets, both from your traditional funders that look predominantly at loan funding, as well as those investors that have mandates to invest in note funding. So the funding structure is quite unique in that it allows us to tap the capital markets on a fairly regular basis as we need capital to grow our lending book. We operate in a market that we believe has significant growth potential, as community scheme living accounts for over 30% of all formal living arrangements in South Africa. So the new funding structure is quite a flexible program that allows us to approach both loan funders as well as institutional investors that have historically focused on note facilities. The structure itself is governed by a common terms agreement, which administratively I think gives the institutional investors access to a platform that they would typically see in a listed note program, and provides all of the benefits that typically are encompassed in those listed note programs, but without the administrative difficulties typically associated with those programs. So the new structure effectively allows us to package individual loans into a size that is attractive to the capital markets. Institutional investors wouldn't be interested in investing in single loans, and this structure effectively allows us to originate and package a portfolio of loans that would ultimately be attractive in size to the institutional investors. So the new structure is definitely easy to maintain. Being an unlisted program, it certainly reduced the administrative difficulties associated with a listed program. And during the process, our team certainly deepened their understanding of the portfolio dynamics. Yes, definitely. I think looking back at the project, it was actually quite enjoyable working with the Moore Debt Advisory team. I would definitely recommend this team to businesses looking to raise capital, looking for innovative solutions, looking for bespoke solutions that the Moore team will take their time to understand and provide them with a solution that suits their requirements. So very comfortable, very happy with the outcome of what we achieved, and we will most certainly be using them. We have already engaged the Moore Debt Advisory team in another part of our business on another transaction to raise capital in one of our other subsidiaries.